Good evening and welcome to the Australian Stock Market Show. With the All Ords Index hitting a fresh all-time high last week, how high can we go? Stay tuned as we will discuss our thoughts on that shortly. We'll also take a look at the major world currencies. And for our main topic in tonight's show, we get into oversold stocks to buy now. Best ASX multi-baggers to make 100%. First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the most important questions around the stock market. Tonight we're excited to share our thoughts on some great stocks like Gillham Financial Group, Lendlease Group, Kogan, the major world currencies and more, so get comfortable as we'll get into those soon. I'm Philip Tortevsky and I am your host for tonight, and joining me senior analyst Janine Cox alongside professional trader Zoran Kresovic, and together we're Australia's most trusted stock market educators. Good evening, Janine.
Good evening, how are you?
Good, and we have a very special guest on today. He's been promised all week, Mr. Zoran Kresovic. Now, Zoran, you're a former student at Wealth Within. You worked at Wealth Within also as an assessor. You've moved on yes. As a broker, international broker, and I mean, how's life treating you at the moment?
Yeah, it's really good. It's actually a pleasure being here with you guys tonight. So, my first session, I would say, but I know you guys for quite some time. We were talking about it before for approximately, 15 years or so?
Yeah,
very long time. So I've been obviously a student of Wealth Within, and I worked with you guys for 2.5 years, but right now I'm working for a broker called Blueberry Markets out of Sydney. And it's a pleasure to be here and talk all the topics that we're going to discuss and get into details.
It is exciting.
So we've got someone from the dark side, but anyway, you're going to give some fantastic comments tonight on the currencies especially. But tonight, as mentioned, we get into the major world currencies. But first, let's take a look at this week's hot stock tip. Janine, what have you got for us tonight?
Well, the hot stock tip for tonight is Centuria Capital, code CNI. So let's get straight into it. On your screen now is marketindex.com. Now you can see here at the top of the screen, the PE ratio is about 15.7, which is reasonable. Dividend 5.1. It's 52-week range, $1.35 to $2.15, and its one-year return at the moment is 44%. So it's been up really nicely. And if I just scroll down here, we can see that Centuria Capital Group is an ASX-listed investment manager with a 25-year track record of delivering a range of products and services to investors, advisors and security holders. Centuria Capital Group has 21.1 billion, I can't forget the 0.1, in assets under management, so that's pretty impressive as well. We've got here the one-year return, as we said, 44% versus the sector up 7.7%, and the ASX 200, 24.5% up. Market capitalisation is 1.6 billion approximately. It's ranked 243 out of, in the top in the market. So that's a smaller stock. You probably might be surprised that I'm picking something like this. What's interesting here is we've got 3 brokers recommending a buy, 2 hold and 1 sell at the moment, and overall a buy. But we'll just go to the charts to have a look at that and decide what we think about that. Now, on the screen there, you can see I've got the monthly chart on the left-hand side, which is showing that the stock actually plunged 68.28% into this low. So, in October 2023, that's a big fall on any stock. And since then, it's been in recovery mode. Now, these are the sort of stocks that you want to be watching as the market sort of heads to its peak over the coming years. Is really interesting territory. So I'll tell you more about that in other shows when we cover more on these stocks. But what you can see here is this nice dashed line across here. It's come back and found support. Now, it looks like magic and smoke and mirrors to some, but to us, that's just a level of support, and we know it's psychological support. The stock since then has broken out of this little move here, and it looks like it's moving on a nice upward trajectory. But this month, it's been sold off a little bit. It looks like it's starting to recover. It's trading towards the top of its monthly range. I'm expecting it could head into this zone. So we're talking somewhere between 234 and around 260 or 270. So over time, a nice move up there. In the short term, we should have a bit of a look at the weekly chart just to get a gauge on what it looks like and also how volatile the stock is. But, you know, we've seen this sort of sideways move in a range more or less. You know, it's at the top of the range, 185, bottom of the range around 151. And look, coming back to test support on that, if it takes out this high, it could mean the trend is going to continue. If it takes out the low, just wait and just watch.
Very well done, if I can say so myself. That stock looks absolutely fantastic there, Janine. But that is it for our weekly hot stock tip. Now, shortly we will get into our topic for the night. But before we do, right now, it is your opportunity to get involved in the show and have your questions answered. Remember, we prioritise phone callers, so call now on 03 9290 9988, or you can text your question to the number on your screen. Now, the first caller in the show right now gets a copy of Dale's book, Accelerate Your Wealth. So pick up your phone and dial 03 9290 9988. Now, while you do that, tonight we will give you our thoughts on the major world currencies. So let's get into it.
On your screen right now is a watch list of the major world currencies. So we're looking actually on yearly chart. We're looking the top 8 to 10 currency pairs, and as you can tell, obviously fairly red all across the board for the year. And it appears that basically all the major currencies were actually diminishing or depreciating against the US dollar. So what we're going to do right now is try to break that down into monthly. And as we actually have a look at the monthly chart, it's obviously slightly different picture on monthly and weekly, because currencies are actually very liquid. We've been discussing this just previously, and obviously things can change quite often.
Yeah, there's a bit of a change. I mean, if we go back to the yearly, we can see Australian dollar versus US dollar down 4.5%. You said that you'd like to have a look at that shortly so we can see what's going on in detail with the Aussie dollar. Euro dollar is one that you like to talk about at times, and that's down almost 5% as well against the US dollar. The New Zealand dollar, did you find that interesting, down 7.6%?
I did,
so far
I certainly have, yes.
Yep,
yes.
and of course the Swiss franc at the bottom is down 5%. But if we put these in order, the one that's gone down the most is the Japanese yen, which is probably no surprise to you.
No, it's not actually, and you know, for those ones that love trading forex markets, I mean, carry trade has been a big play over the last probably 12 to 24 months when looking at yen, obviously, you know, offsetting the low yielding interest rates of Japan, which is obviously an export economy, and they've had quite a few years of stagnation over the past 20 years or so. And, you know, in fact, actually at one point in time, the interest rates were negative, you know, versus, let's have a look at, you know, US dollar, which obviously has been appreciating over the past couple of years, and interest rates have been rising all across the globe. So a lot of investors would like to actually do that carry trade, obviously offsetting the low yielding or negative interest rates against the high yielding rates to actually try to gain as much exposure and upside as possible.
Let me ask you this one, Zoran, because I mean, you know, looking at that board there, all of those currencies are, you know, against the US dollar, and they are all down. And right now we had, you know, major news come out with the US election. And so what do you see moving forward in terms of that US dollar? I mean, is there going to be more strength, or are you seeing it coming off? Because that's going to impact how these traders trade these pairs, right?
Absolutely. That's a great question, actually. And it's actually $1 million question. But what we can tell right now as things stand, and obviously Trump coming into power, he will be focusing a lot on internalizing or you know, improving the US economy. So generally speaking, if you do take that into account, we would probably imagine that US dollar...
Else?
Well, US dollar is probably going to continue gaining strength. And if you have a look at the US dollar index, so obviously US as a currency against all the major currencies across the globe, we can actually see that US dollar has actually broken around 107 level dollar mark. So that's actually a 2-year high right now. So dollar is gaining quite a bit of strength. Obviously over the last 24 hours as well, we've got quite a bit of news about tariffs again coming into play. So it seems that, you know, he is actually not quite happy with China, Mexico and Canada. And, you know, they could provide a bit of risk off and essentially a bit more upside on to US dollar as well.
You look at weekly and daily more so. So we were looking at the yearly and the monthly, but I mean, in the very short term, just the last couple of days, we've seen a bit of an uptick in the Australian dollar and the other currencies. Do you want to make a brief comment about that?
I certainly do. I think at the end of the day, you know, US or Fed Jerome Powell has been actually talking a lot about reducing the interest rate cuts, and we've up to now we've had 50 basis points of interest rate cuts. Some of these other economies, such as let's say Australia in particular, we were actually quite late to the table with raising the rates, and we were one of the last few central banks that actually was raising the rates 18 months ago. So if we were to look at actually Aussie dollar continuing to stay higher up with regards to the interest rates and US dollar was coming off, then we would expect obviously Aussie to at least somewhat provide a bit of headwind and maybe a little bit more upside against the US dollar, and that's what we're probably seeing right now over the last week or so.
All right, well there you have
the
it.
Aussie dollar going up a little bit.
Yes, that's how a currency expert does it. But there's quite a bit to digest there. But anyway, that is it for our thoughts on major world currencies. Now, before we get into our first email, remember to get your questions answered live on air, you will need to text or call into the show. You can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now, let's get into our first question. Vin is asking our thoughts on SQ2. SQ2 looked range bound for the past 2 years and I was happy to stay within the range and make 20%. I entered on the 20th of September 2024 at 105 cents and I expected the stock to find resistance at $172 or $27, sorry. But the stock continued strongly through that. At this point, as there was no sell signal, I decided to take the profit along with half of my capital and leave the other half of my capital just in case it continues on. Now I am reassessing my thoughts and on the stock and would love to hear your thoughts on that. That's an absolute tongue twister, that email. Hopefully we could have made it a bit easier on the first one. But anyway.
172, he would have been excited if it got to that, but it got to 127, which is the level that he was hoping for.
But I mean, the biggest part of that, what speaks out to me anyway, and I know you're going to answer this, is, you know, he's not followed his rules. He's anticipated the stock going somewhere and he's sold on that hope. Now the stock's broken all the way through. I mean, how does that play as a trader in terms of psychology and long term when you're making changes on the go that aren't planned?
That's a really good question. I really want to answer that, and I want to answer his question as well.
Yep.
You know, you've loaded it up there.
I have.
But look, if we look at the chart again, that's going to tell us everything. So he's sold out, and you've sold out at around 127 now. I get the feeling, that you were looking at this level, and I can see the resistance you're talking about. But I guess this is a real lesson learned. Often, and this is a little bit of a tip for you. Often when a stock hits a level, it's gone 1, 2, 3, 4 times. There's a significant probability that says the next time it goes through, it's going to rip-roar through. Now, it may turn around and come back down again. Often stocks will go through resistance levels where there's a bit of volatility behind it, which there clearly is in this one. But looking at the chart, I'm going to expand it up a little bit more. We can see there that where you bought down here, which I've no issues with the purchase where you've bought, the level you've bought at. I think that was really good. In terms of the sell side, it's really important to have some solid rules. Even if you've got to have a rule, not just getting out at a level. And that's one of the things that we really encourage all people who are looking to develop themselves in the market to have a strategy, proper strategy. So it's about having that discipline to follow that through. And so when you decide to actually take some money off the table, and I've got no issue. I know if Dale was here that we'd be having a bit of a debate about this one, but I have absolutely no issue with you taking some profits. It's just got to be based on a proper rule. So you've got the other half of your position sitting there to get the cream off the top, and it's important just to stick to your rules, whatever they were, and manage that trade. So we're going to talk more tonight about how to actually manage a trade in the second part, which is in the bonus part. So if you're only on YouTube, make sure you get that subscription to Talking Wealth. It's free. I think for the first 7 days you can get on and watch the rest of tonight's show. We're going to talk a lot about that. But Zoran, have you got any thoughts on this one? Did you like SQ2?
I actually really do. I think it's a really, really good setup. That 130 level, which actually seems to provide quite a bit of resistance, and it has done so since 2022, has actually broken. I think obviously it's pushed aggressively ahead of it, and if you have a look at the green bars and so on, but I think we could expect probably for the price to drop back, because this is what normally happens in these circumstances.
Good stock choice. It's just that just run with it, really.
Run with it, and I mean, if it does come down to 120 or 130 again, quite a bit of support. It's probably a healthy pullback, and then we might be able to see the price continue to go higher.
Well, lucky Dale's not here, because at the end of the day, to me, it's let your profits run and cut your losses short, not cut your runners short. But anyway, we do have a caller on the line. Welcome to the Australian Stock Market Show. Who have we got on the line?
G'day, yeah, it's Guy here. How you going?
Good, Guy. Thanks for calling in. What's your question for us today?
I've got a question regarding one of Janine's favourites, I believe. It's BHP.
Yes.
I am in the stock and have been for a long time, and not a big parcel, but I've been watching it and I was hoping to buy some more, but been a bit disappointed of late as it's sort of come down from this high of $46. I was thinking it might have been in a bit of an uptrend, but then it's dropped back, and I'm wondering if it's mainly hopefully bottoming around this where it is at the moment. I guess I'm looking at that, wondering what would be a good entry sort of price, and I'm thinking probably around $45, $46 if you can get above that high, but I'm keen to hear your thoughts.
All right, and are you thinking this trade is more short-term, medium-term, long-term?
Probably more medium-term.
Okay.
Yeah.
All right, well, thank you very much for your call. I'll push this one on to Janine, given BHP is her favourite stock, is it?
Not my favourite, but it is a good stock. Now, thank you, Guy, for calling in on this one and being brave enough to call into the show. Thanks, I'm going to give you a bit extra because of that. So, looking at BHP on the screen there, you can see obviously it's been pulling back. This is what Guy was talking about. It's pulling back and it's doing so again. The last couple of weeks it's been down. We can see there on the weekly chart. I just don't think there's any joy with BHP right now, and I wouldn't be holding out any hope. You just let the direction tell you when it's time, not just sort of thinking, I hope, is it coming to that time right now. But it's great that you're watching this stock, because I think this is an area where you're going to make some great returns if you just stay patient and continue to watch. Its PE ratio at the moment feels higher than FMG. FMG is actually really low at the moment. Rio, I think, is probably in the middle between the two, and BHP seems to be, from a fundamental perspective, rated up there much higher. So, but from a technical perspective, at the moment, I'm actually liking Rio more than BHP. You might be surprised by that.
Well, let's flip the script. Let me ask you this. What would you want to see on BHP for you to start to get more confident? Is it price breaking through those all-time highs, because it does look like it is stuck sideways a little, or is it just moving nicely in an upward direction?
Depends on your risk, really, the answer to that question. So looking at the chart again, if we can please, you can see there that the pullback over the past few weeks has been quite strong, almost back to test the level of that low. So because of that weakness, it feels, talking about all-time high, which some people might just leave it until it goes through that all-time high, which is fine to do. But it's at least got to get through this point here as a minimum to be able to look at anything, and really strongly want to see it close above it.
All right, great advice there. Hopefully that answered your question, Guy. Not right now for BHP. But anyway, we do have another email from Kieran. I've been paper trading the hot stock tips all year, and it is impressive that the hot stock tip portfolio has never been in the negative overall. One of the best lessons I've learned this year is the value of proper risk management. Completing the diploma in share trading has deepened my understanding of market mechanics and provided strategies that, combined with risk management, give me confidence in growing my portfolio. Now, while no one can predict the market, having a structured approach stacks the odds in my favour. And Phil, how about you finish the year with a bang? I challenge you to pick a couple of stocks or specky stocks to really shake things up and test your crystal ball skills. Now, I'm glad that email...
You have done well, haven't you?
I'm glad that email went on, because...
with the hot stock tip, you've done really well.
I was about to say, with the nature of that email, this is your perfect opportunity to tell me how great I am. but
I just did. That's probably all you're going to get from me.
I mean, look. From what a lot of the viewers don't know is, the hot stock tip is only one part of what we do. We don't put on the buying and selling rules. So you got to think, how much can you use supersede those returns, knowing when to get in and when to get out exactly. Because we're not necessarily buying every stock we recommend, or you would be if you're trading a portfolio medium term. We do hot stock tips on the the Monday report. So it's about 100 stock tips a year. You're not trading 100 stocks medium term. And so, but it also shows proof in what you can achieve by having a good education. Now, I'm pumping my own tyres up here.
So you're just taking the work out of it for them, like the stuff that you're doing on Mondays and the tip for the week as well. But hey, I was lucky enough to get the opportunity tonight to pick one, but there was almost nothing left. I think Phil had done it all.
Yeah, I mean, Zoran, your thoughts on obviously, you watch the show on Hot Stock, but you're also a student and you use this information. It's helped you immensely in terms of picking stocks. I mean, where has it taken you in terms of your analysis? More just, being able to trade that medium term, short term, any type of market?
Absolutely. I mean, you can really apply the techniques and the knowledge in any part of the market in itself, like whether you're a short-term or intraday trader or medium or long-term trader. It really comes down to your risk profile and how much work you're actually willing to put in. So not necessarily if you trade short-term, you might answer all your questions, but it's also about the lifestyle and everything else that's actually that's going on in your life as well. I mean, myself, like you, we've got a little one, so trading into the short term, and Janine as well, can actually take a lot out of you, and obviously with working full time. So sometimes looking more short to medium term, can present great opportunities in the market.
Oh yeah, especially trying to trade short term on the night session when you've had no sleep. Yeah, the crying baby, that's an absolute nightmare. But anyway, next is Paul asking our thoughts on LYC. I bought it upon breaking out of the long-term downtrend on the monthly chart at $8.03. Unfortunately, after buying in, it tanked on me. Now I'm wondering if you think I went in too early, or whether this is merely a counter move or a reversal of the short or medium-term trend. I'm within touching distance of my stop loss, but waiting to get out based on this week's performance. Now, I'll go to you on this one, Zoran. Obviously, LYC, he's gotten in. And this can happen, you get into a stock and initially, upon getting in, the stock turns and tanks.
And we always take it personal, don't we?
Yeah, we do take it personally. Has he gotten in too early, or everything's on track?
Look, I'm looking at the stock obviously on monthly chart, and I can actually clearly see that it's got a fair bit of downside to it from its actually peak in April 2022. It's broken through a downtrend line as well, and it's starting to creep up. So it's actually gaining a fair bit of momentum.
Would you have got in when he got in?
If that was my strategy, potentially I would, because I'm actually looking at the length of the actual monthly bars, and it's indicating a fair bit of momentum. I think I'd probably say one concerning thing for me right now is the fact that obviously it has dropped 16.3%, which is actually quite substantial. And not only that, the monthly bar is obviously indicating that it's an outside bar, and it seems like actually sellers are in full control right now.
But sometimes we see this sort of drift through a trend line and it comes back to test and then off it goes again. So it's really too early to tell, isn't it?
It is too early to tell, and that's where we have a thing called trading plan. So everything should be documented and basically follow that trading plan from the start till the end.
Yep, beautiful.
All right, well there you have it. Follow that trading plan is Zoran's expert opinion. But anyway, that is it for our take on Linus. All right, time to get excited because the team trawled through the market to find cheap oversold stocks on the ASX right now. These stocks have the potential to make 100% or more on your investments if traded correctly. So get ready, guys. This show is packed with ideas on how to get those outrageous returns. Now, talking of cheap stocks, it creates so much excitement amongst the investors. After all, everyone wants a bargain, right? But there's a fine line between buying cheap or oversold correctly and trying to catch falling knives, which generally ends up in more pain than it does success. So let's start things off by asking, what is cheap and what is oversold, Janine?
Cheap is something that's sort of thrown around a lot, and especially on Google. You Google it, cheap stock, and you have all of these, can I say brokers? But it wouldn't be you, saying something about cheap stocks. Now, cheap is not something you want to use. You want to look at oversold and then think to yourself, okay, do I need to look at PE ratios to work this out, or do I look at a chart? And I'd say both is a good start. When a stock's been oversold, often a price will continue to fall much further than what it otherwise would have, and tends to, the PE ratios tend to drop right down into single digits when that happens. But if that's not the case, then you just look at the technicals and look at the whole picture of the chart. We're going to talk about that later on with some specific examples. But the 52-week low is another thing that drives me nuts, and that was what I saw at the start when I first started learning the stock market. People think, oh, it's at its 52-week low, therefore it must be cheap, which is totally not true at all.
Well, it's all relative to where the stock is in its whole life cycle. But anyway, quite a common approach to identifying oversold stocks is through the use of indicators. So is this the right approach, and should you be using these indicators for buying? Now, Zoran, I'll go to you on this one.
Yeah. Look, part of my strategy is obviously not to use solely indicators in itself. Yes, you can definitely include it and bake it in part of your strategy, but solely looking at the indicators, I mean, what Janine's just mentioned previously, just because it's oversold, or undervalued, it doesn't mean it's actually good. So I think it's actually a combination of tools and rules that you need to actually have in play and combine together to actually have a solid result. So
sometimes, I mean, when you're talking about indicators, a lot of indicators are price-based, right? And
lagging.
Are they generally lagging?
Correct.
So, I mean, if you're looking to see what's coming next, you're probably going to be a little bit behind the eight ball looking at these kinds of...
I mean, sometimes it can work. I'm going to play devil's advocate here and say sometimes it can actually work in your favor, exactly, because if the stock is bottoming out and it's starting to actually start a new uptrend, you can actually miss out on the initial 10 to 20%, which is completely okay, because if you're going for the middle 40 to 60% profit, you're still fine. But I guess the main concern or problem is that I generally find over the years with people is they always try to pick the bottom of the market or top of the market just so they can actually break to their friends and family, which it can work in your favor at times, but I'm a little bit more risk averse, and I like to actually take the middle bit when I'm actually very confident and secure that it's a new trend and it's a new move, and I can actually ride on that trend and profit from it.
Confirmation. That's exactly what we're talking about. All right, so should investors place more emphasis on fundamentals when looking to identify stocks that have been oversold? Now, I know you mentioned this before, Janine, looking at PE ratios, but is there a broad spectrum of fundamentals that people need to be looking at here?
Well, look, we generally say PE ratio is a good place to start, but earnings per share is actually better. However, when you're in that situation of flux, and I went through the GFC, so I know what it's like and what happens in that. And we're going to show you some information around that time shortly, but it was just so volatile that the PEs and all of the fundamentals were not really reflecting what was going on at the time. So when a stock's been oversold, you have to look at a chart. There's just no choice, I think, in terms of proper risk management.
Yeah. Well, the price is always going to dictate where it's been and where it's
going,
going,
it's the patterns, really, the long-term picture and patterns and support and resistance that are going to show you where's it more likely to stop, because someone can sit there and look at the fundamentals and say, yeah, this is cheap right now, but how cheap and could it go cheaper? That's what you really got to be thinking about.
Yeah, it's always a case of fundamentals, what and price when, right?
Exactly.
Yeah, all right, well, great stuff. How about we get into some sector analysis? Specifically, is it important to take a big picture view when trying to identify oversold stocks by looking at whether certain sectors have been sold off heavily? I mean, I'll go back to you on this one, Zoran. Are you placing, because a lot of people do that, they place a bit of a broad view, they look at sector analysis and they break it down into stocks, or is it more important just to look at the stock itself?
I'm going to actually go with the first one. I think actually sector analysis and global view is actually quite significant and important. I do that myself all the time. I mean, I look at what's happening globally and I break it down into fundamentals, and then obviously have a look at the technicals as well. I mean, if you got one stock that's actually moving counter trend and it's going upwards, but 99% of the stocks within sector are actually underperforming, then you got to ask yourself, well, what is the reason that stock is actually going counter to the overall trend? So I do look at it, and I mean, tech sector is a perfect example. We've had a magnificent run, of tech stocks on ASX, but also globally. If you have a look at the Dow and Nasdaq and so on, so you would probably find the majority of the stocks will actually continue to go up as opposed to, let's say, material sector. And we had a look at the BHP before, which looks to be in actually medium-term downtrend. So I do put a fair bit of weight into that, and then I break it down into stocks, look at the PE, EPS, and also take into account the profitability of the company, but also the actual technical analysis as well.
All right, fantastic. Now, when the market corrected in the GFC, investors were told stocks were cheap. In fact, many valuations appeared cheap also. So let's go and take a look at when valuations were being called cheap. Now, Janine, I know you're going to bring up
I'm jumping
a chart here. We had a look before.
Right
yes,
now.
you've got some fantastic stuff.
All right, thanks, Phil. Let's just have a look at this. On the left-hand side of the chart, you can see these are some notes from an AFR article, Australian Financial Review article in October 2018, reflecting on what happened around the time of the GFC. It was so interesting. In July 07, the CBA Treasurer got a call from APRA, right? So this is right here where this vertical line is marked before the peak of the market, asking about whether everything was okay. Now, I won't go into the full detail of it. You'd have to Google to have a look, but the money was cheap prior to this. So our Australian banks were actually well funded at that time. They were raising funds. This is another sign to look for into the peak. Overseas credit funds were making losses. Some funds closed due to the CDOs that went bad, and we all know about that. RAMS tells the ASX that it's unable to roll over its debt. I think it was about $1 billion. And the RBA, in its wisdom, had the cash rate at 6.25%, right near that high. Think about where we are right now. So when were stocks cheap? Well, this fall here. So the peak was actually in November 2007. There's December, there's January. The peak was here, it actually plummeted here, down 25% from the high. That was when the market commentators were saying stocks were cheap. I think initially the investors didn't believe it. They waited. Stocks got even cheaper into March 2008. Now, at the time, we were saying, no, this is not a time to buy. Investors started to push the market higher. The World Bank in 2008 was warning of a credit crunch. The RBA lifted the cash rate to 7.25. Valuations actually appeared cheap in this green box here. But look what happened after. You know, this is a real lesson, and we have to keep thinking about that in relation to cheap stocks. So September 2008, US banks nationalised, and there was the collapses all everywhere. Remember that? So you don't want to be caught up in that again. So just remember, when they say that stocks are cheap, it doesn't mean that they're cheap at all.
They can always get cheaper.
Exactly.
But all right, while brokers, market commentators, fund managers, they often try to attract investors with these talk of cheap stocks. Now, I want to go back to you on this one, Janine. What do investors do? Because as you said, obviously throughout that period, there would have been heaps of media going out saying, hey, stocks are cheap, you should be buying right now. I mean, what's the play for investors?
Well, they have to think about the information that they're getting and can I trust it, you know? There were a lot of brokers releasing information at the time that was just misleading, in my opinion. But, you know, if you've got a broker you can trust, like, for example, someone sitting right next to me, if you've got people in the industry you can trust, that's a different thing. You've got to know the source. But the other thing is always look at the chart to verify what anyone tells you, regardless.
And you can always, go and do your own fundamental research and do those valuations and get it yourself. But anyway, before we get into the stocks, how about we drill down to a couple of sectors to add some more perspective on what we just spoke about. Now, I know you've got a few more there, Janine.
Yeah, look, this is the infotech sector. So let's just have a look at this one on your screen. So, Zoran, this is the S&P ASX 200 infotech. Now, we know this one's taken off recently, gone through new all-time highs. Yep. We're not looking at, obviously, for cheap stocks in this area. But we're actually, it's the opposite scenario. It's thinking, is this overvalued rather than whether it's cheap? So, but is this cheap right now? Is it overvalued? Which one?
Yeah, it's a great question, actually. I mean, if you have a look at the chart on the left, and we can see actually a significant upside run over the last couple of years. Looking at the tech stocks and especially the huge exposures in the US, we can actually see that some of these stocks are actually 8 to 10 times, their earning ratio at the moment, and they're actually, quite big in terms of the size. But
we've lagged. I mean, we've lagged the US, and we've only not long broken through that prior all-time high that was back in 2021.
Correct, but also our market is actually not as significant as big, you know, in terms of the actual stock number of stocks that are actually available as well.
Sometimes you even find, even though stocks are running at markets are running at all-time highs, there'll be new, you know, advancements in the company or the sector that'll push valuations to fresh levels where the stock is, you know, fair value or undervalued at that time. But anyway, another one.
Materials, just quickly, if we have a look back at the chart here, we can see we were talking about BHP before. Now this sector is obviously really lagging. And this is an area where we could find some cheap, well, should I say, oversold?
We could find some opportunities, oversold opportunities.
Exactly,
yes,
oversold
yes.
opportunities in the near term. So keep an eye on that one.
All right, well, time for the exciting part now, guys, stocks. So we're also going to share ideas on how to enter and exit so you can hold on to that profit. Now, Zoran, take it away, mate. First stock.
First stock is actually Chalice Mining. So obviously a mining stock, and as we've been mentioning before, obviously materials and mining sector hasn't been actually performing at its best, and also we can actually have a look at the fundamentally as well in terms of the China. When I look at the stock in itself, I can see that it's actually moving sideways for quite some time. I can see a bit of support level around $1, and that's obviously a nice round number, which has been providing quite a bit of cluster. So at this point in time, I'm probably be defending the $1 level, and if the stock can actually consolidate around these levels and start going upwards, then we might be able to see a bit of upside.
I mean, could we see the stock go to $4? I mean, that's an 85% increase on where it's, if it goes through that high, next level of support or resistance could be this low here in June 2022.
But I mean, can I ask both of you, is there any concern with stocks that have fallen so much and they're trawling, as we said, you know, at these levels? Sure, they're oversold, but is there that concern that they get stuck sideways for a very long time?
Well, they can. I mean, just think of Magellan Financial, which we're going to have a look soon. Some of these stocks just do that for, could be 6 months, 12 months, 2 years at a time. This one, for example, it's made its low back in 2024, started 2024. It's already been doing that for a year. It's not to say that it couldn't go lower either, Phil.
But I mean, there's still gains, an 85% move, even while it's at those low prices. Just a few, you know, bits of movement over a couple of weeks could spell 10, 20, 30, 40% return. So there's still profit in there.
At the right time, though.
If you get in at the right time, of course.
But it's also about the patience, isn't it? So if the stock is actually moving sideways for quite a significant period of time or consolidating at the market bottom, that's actually not a bad thing, you know, if you can find the consolidation and sideways move, because essentially at some point it's going to, you know, hopefully start creeping upwards. And
that's what we're looking for.
And then you're looking for the next upside run where you can actually make most of it.
Or getting in early, right? Getting in early is always better than getting in late. But anyway, we do have another stock, Janine.
There's always more. All right, shall we get into this one? This is Insignia Financial. IFL is the code. Now, this is particularly interesting given the long-term support that we've seen on this one, all the way across that bottom there, I'm liking. So far, it's been up. It's made its low around the end of 2023. It's been up for a few months. Some might think, well, have I missed it? But, you know, looking at the runs in the past, we can see what sort of gains can be made from this stock. And, you know, there's 250% there. So potentially it might be in the early stages. We've got 118 or 120% there. So if we were to think about that as a 100% return, that would probably bring us up to around $4. And then that prior high there is 160. So it's not to say this stock could be heading up between $4 and $5 over time. So it's just a matter of, well, when do you get in? When's a good time to do that? So we just have a look at the shorter term to see that. We can see down at the bottom here, it's just pulling back at the moment. I'd say just wait for a bit of a pullback and then see, you know, make sure you've got some good rules to get in.
Yeah, I agree.
Ready for the next one?
All right, the next one, that's INR, which is really interesting. INR is the code. Did you want to have a look at that one?
Yeah, sure. I mean, looking at the stock in itself, it's obviously quite a long-term downtrend once again on the left-hand side on the monthly chart. And then we can actually have a look at the weekly chart. At the moment, a bit of consolidation and a pullback as well. 13 to 15 cents seem to provide a bit of support around these levels. But nevertheless, if the price does actually come a little bit lower, then it could retest. Break below that, obviously, it could go as as low as, less than 10 cents. So I'd be actually fairly concerned around that. But I think 10 cents in the short term, it needs to actually hold. And then if you see a break just above 30 cents or so, then we could actually push for more upside run. But this seems to be a bit of a speculative stock at the moment that I'm looking at. And if I had to pick and choose, Janine and Phil, between this stock in itself and the stock prior, I'd probably go with the prior stock any time of the day.
Oh, very interesting. I actually didn't mind this one. There you go.
Everybody's different, you see. There's something for everyone here, isn't there?
Yes, that's the beauty of the stock market. But we do have another one.
All right, let's get into the next one. It's Kogan, which really, some people really like this stock, but it hasn't moved on. It's just really been struggling. I won't stick on the monthly chart for now. I'm just going to have a look at the weekly chart. We've seen a short-term rise over a couple of months just coming up here. Bit of a pullback. It's really struggling there. Kogan needs to get through that high of 528, otherwise it risks coming back to the prior low in August 2024. And I can hear someone saying, please don't say that, Janine, but unfortunately that's the reality of what we're looking at here. So it must get through that level in the short term to make a bit of a run and head for that high. It could do it. There is a potential there. These stocks that have been oversold significantly, they always have potential to keep going up, but we just have to be patient and get in at the right time. So I think it's interesting. Yeah,
it's very interesting. And to me, I mean, this is an important question as well. When these stocks have fallen so much, in your mind, and I'll ask both of you this, is it a short-term play, a medium-term play, or a long-term play? Because obviously the long-term direction is down, or are you just trading that as it goes along and accepting what the market gives you and updating your analysis as you go along?
Great question.
Well, I think you mentioned that before earlier in the show, it's all about confirmation, right? So, having a look at stock like this that's actually fallen so much out of bed, it would take actually quite a bit of time to consolidate and start going upwards. And Janine mentioned that just above $5 to actually see a bit of upside. So for me right now, this is actually not a long-term play at the moment. I'd need to see some significant confirmation that we got a start of a new medium to long-term trend, and then essentially get onto it. But if you're looking to trade range trading or look at something very, very short term, then by all means you can actually consider doing it. But it's not for faint-hearted, this one, from what I can tell, and definitely out of scope for me.
Yeah, you're going to have some good rules around that.
All right, then. Let's go to the next one. The next one is LIC, Lifestyle Communities Limited. Now, this has had an unbelievable fall. So this is where I guess the lesson is when stocks come down, some people would have bought in around here because they were thinking, oh, there's a strong support level. It started to move up, and then they've got stuck in the downdraft. Always wait for that confirmation first. You see this move here. Some people were trying to buy the low, but buy the dip, as they say. But the dip's gone a lot lower since then, and we've seen it fall another 40%. So right now, though, I think it's actually looking good. Coming off this low, it's a little bit early at this stage, but it's consolidating, which is really nice. The buyers and sellers are coming to agreement. So I'd like to see it get through that high in October 2024, but choose your trigger and your strategy. Maybe you're waiting for something more on the monthly chart. That's totally up to you. But I think there's a potential.
Did you want to add something on that, John?
Probably the only point that I would like to add is that I would also take into account here volume as well. So I would actually like to see a bit of momentum, because from what I can see on the weekly chart here is that kind of price was actually appreciating or going sideways whilst the volume was actually dropping. So it doesn't actually add conviction to me that there is still a fair bit of buyers that are actually queuing up to get onto the stock in itself. So I would really like to see the volume come through and then, support that buying price and for it to continue to go upwards.
Great point.
Yep. Now, you know what I'm going to say, Janine?
Next.
One more. Next, yeah.
One more. How do I choose out of all of these stocks? All right, I'm going to pick Magellan Financial because we talked about it before.
Beautiful.
So here we've got a stock that everybody's been saying, oh yes, look, this is going to be great when it goes, but we're still waiting for a decent rise. I mean, there's a possibility that there could already be an entry there depending on what your rules are. Next level of resistance could be somewhere up here, which, that's a big run if it does get going. It's been oversold and there's a lot of controversy around it, and some of it with good reason. But now it's got this really nice basing pattern happening here. It's a stock that could make 100%, but I can't guarantee over what time frame. It's just a question of, it wouldn't be a short term. I'd say it'd be more medium term here we're talking.
All right, beautiful. Now we've got 3 minutes, 3 stocks. I know you can do it, Janine.
3 minutes, 2 stocks?
2 stocks, sorry. 3 minutes, 2 stocks.
Oh, well, I've got 3 actually. You're right. You can count.
Can I?
All right. You're not just good looks. You can count.
Thank you.
Nickel Industries, and it's good stock tipper, so that we've been told tonight.
This Nickel Industries?
The best hot stock tipper.
Well, I'm a bit disappointed. You didn't say it too loud, but it's all right.
It's okay.
It's recorded, so
what can I do?
I can wind it back.
All right, here we've got Nickel Industries, left-hand side of the chart there. You can see there's been a decent consolidation here, a significant fall, and it's now finding support. So I'm just really like the look of this. If it just doubles down and takes off on the downside and goes below that trough, then forget about it. But while it's hanging around this level here, once it gets back through my preferred dollar level, then I think that would be really, really nice little opportunity. But I would probably only go short to medium term on this one.
Interesting space too, that one as well, in the nickel space. But Zoran, would you like to get into the next one?
Yeah, sure.
All right, how about we go to Lend-Lease, which is one that's been sold off over such a long period of time. And you can see the big decline into 2024, I think it looks like. Is this a recovery?
I'm not quite sure if it's a recovery yet, but it's been obviously a long-term downtrend play here. And from what I can see here, 730 seems to provide quite a bit of resistance. We also had a gap down at some point in the past, back in February 2024. That gap is obviously been filled up, and we actually bottomed out back in June 2024. So the uptrend play is there, obviously providing better resistance around the 730 level. It's come back to retest. If the pullback is actually fairly shallow and we can, break above 730 major peak, then I think it could be a good little ride, and we could actually go all the way towards the level of around $8.70 to $9 mark, which is a fair bit of upside, to be honest, from the current levels as well.
So short to medium term or short term?
I'd be probably looking this one short to medium term, especially if we break through that peak of 780.
And is that because of the liquidity of the stock, or is that more because of the way that it's unfolded?
I really like the setup technically on this stock, and I think in general what I like to see is actually when a particular stock actually bottoms out, we get quite a significant upside run, and then essentially a bit of a pullback, which is always good to see.
Okay.
Great stuff. All right, guys, last stock, OFX.
All right, quickly. Now, this is one that I wanted to do. This is my shock and awe stock.
That's cool.
Did that sound bad?
No.
Okay, so reason for that, if we have a look back at the chart, is because we talk about not buying cheap. Now, this stock has been sold off for so long and people thought it was cheap, but look, the market's the good, gauge of all of that and is telling us no. So I just wanted to leave that one with you just for a bit of a laugh.
Like a horror movie right at the end.
Sense of humour.
Yep. Well, sense of humour or horror, pick your choice. But anyway, thanks for that, team. Now stay with us as we'll be right back after this short break.
This week on Talking Wealth,
Dale and I discuss the ramifications of the $8.8 billion powerhouse merger between Sigma Healthcare and Chemist Warehouse. This stock has been rising since November. So if there is something coming, you will see it. There will be people buying it. It doesn't matter what the news is. As long as you see volatile buying, it's like, hey, something's going on here.
learn how hardness can boost resilience, well-being and performance with Paul Taylor.
People who scored higher in hardiness were more likely to pass basic military training, have proactive coping strategies around stress, and more likely to find meaning and purpose in hardship as well. And I tend to lean into those things.
Find out the 5 key qualities to seek in a mortgage broker with Brighton Barazia.
Mortgages or real estate is like finance. You want to make sure this person or this individual working with is looking after your interests, right? And that's really important. And how do you find out if this person is going to be trustworthy and honest with you? As ask a question in which you know the answer to already.
Learn to balance passion, purpose, and leadership for a lasting impact with Sylvia Arreton.
How did you find your purpose, or did you find your purpose? Because a lot of adults in the business world, or even in the workplace, they're not really passionate about what they do.
Get your free 7-day trial now to watch this and more.
Only on Talking Wealth. That amazing content you just saw is going live this Thursday on Talking Wealth. Now moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 0392909988. That's 0392909988. Or you can text the number on your screen. Now whilst we wait for your call, let's get into our next email. Sean wants to know whether it is time to get out of CBA. Analysts and brokers are noting CBA as a sell. Are they saying this to get investors to sell so that they can create buying opportunities for their clients? Furthermore, the trend has accelerated closer to vertical. Is this a sign CBA is about to run out of steam and pull back to a more sustainable uptrend angle? Would it be prudent to take some profit at these levels and reinvest when it pulls back? Or is it a possibility CBA may be around $200 stock very soon? Now, what I didn't add in this email, Janine, was that he congratulated you on picking CBA as being a $150 stock. So well done on that. Fantastic work.
Thank you. You're
Well
sharing
done.
and caring
We're
here,
sharing
aren't
the
you?
love. I like this combination. We're friends.
Just got to include me now.
We're
mate.
finally friends. But
All right, can we get down to
yeah,
CBA now?
$200
Okay. I think it's a very real target for
this
CBA.
year, next year.
I'd say possibly next year and into 2026. More 2026. If we look at what CBA has done over time, we can see that it's natural for, it's good that you're asking this question, by the way, because it's actually natural for it to make some of these moves, and you can see the same sort of length of that move. Every so often it does it, and it's just done it again and it accelerated away, same sort of length. And it shot through my target, so I didn't expect it to go straight to 160. I thought it would sort of stop close to the 150, 152 or thereabouts. But look now, that same sort of pattern of up and down, that's just, follow the bouncing ball is exactly what you do when you're looking at the stock market. So if we're drawing a line up, we can see that it's accelerated away a couple of times. I'm just covering the chart in lines here, I know. But your question about whether it's more likely to come back, I would say yes, it's more likely to come back in the short term. May find support somewhere around 150, could be 145 to 150 on that line, and then more than likely to take off again into 2025. We're more likely to see a run up in our market in 2025.
All right, excellent stuff. We do have a text now coming from Ben who says, "G'day team, thanks for all your invaluable insights. Could you please give your thoughts on PMT? Thanks, Ben." Now, I'm going to get you to have a look at this one, Zoran, while Janine brings it up.
PMT, that doesn't sound great, does it?
Yeah,
PMT.
no, nothing like CBA.
What,
that's for
what
sure.
joke have you got there, Janine?
No, only females would understand
Oh,
that,
okay.
sounds like.
Yeah.
Anyway, if we're coming down here, we can see a big fall, Zoran. What do you think about it? Has it stopped?
Yeah, I mean, I don't put too much confidence in this stock at the moment right now. I mean, I'm looking at both on monthly and weekly charts, and it just looks like a falling knife. I've never been actually a big fan of, getting onto stocks when they're actually in a medium or long-term downtrend, and I can see probably a lot more downside here because I really can't find any level of support on the stock in itself where it could actually stop right now. And it'd be interesting to see actually look at the fundamentals of this business as well and see what they're doing, because it doesn't look good at all.
I mean, the question to me is when people bring up stocks like this, what is it specifically that they're looking for? I think you just touched on it. It's fundamentally looking at a stock that might appear cheap, which kind of ties in well with
52-week
the
low,
show
right?
today.
Yeah, exactly.
But I mean, it's very dangerous trying to catch these falling knives. You as you said.
Sometimes people are holding out hope if they've got the stock that it might stop and turn around, and they're looking for any sign of that. And
But hope's not a
I'd like to
strategy.
be able to say there is, but right now, because if we go back to the chart, because this low here in September was taken out, we still need to wait now for it to turn up and then to trade above that low, the level of that low. So if we look at what that means from a percentage point of view, let's have a look and see what it's got to do to get off this low. It's now got to go above, it's now got to trade up about 40%. And I just don't see that happening really quickly for this one.
But also, not only that, I mean, looking at stocks like this, you know, if you have a look at it over the medium to long term, even if the stock was actually to provide some good fundamentals, and by all means, I haven't had chance to look what they're doing. You know, if he was to consolidate and start actually, you know, moving upwards, how long will it actually take to come to the back up to those levels? It could actually take twice as much time, because obviously, as we know, markets go up in stairs, come down in elevator, and this is a perfect example of it.
Yeah.
So,
and volume often spikes at the bottom, which could be, there's a bit of a volume spike, but that's the only thing I could
But
see.
I mean, if you have a look at the volume, Janine, on this chart in itself, we can actually see the volume spiked up back in September and back in June 2024 as well. So
while it was falling,
not much hope.
We tried.
That's what I see.
We tried, Ben. We tried. Probably better to pick another stock at the moment, but we do have a caller on the line now. Welcome to the Australian Stock Market Show. Who have we got on the line?
This is Sydney here.
Sydney, thanks for calling in. What's your question for us today?
Hi guys, thanks for the informative show every Tuesday. Is it a good time to enter drone shell? And if not, what is a good entry price?
All right, great question, Sydney. Now, I'm going to send this one to you, Janine. Drone Shield obviously has been so popular on this show since someone called it at 20 cents. Not going to name who.
Yes, that was a great call, by the way. And it just rocketed off since then.
It did.
But
is there another opportunity now?
I don't know. We could hold out hope for that, but it may not come in the short term. That's the thing. So we're still seeing a massive push to the downside at the moment. So, I mean, you were talking about 20 cents somewhere down where you made your recommendation. That was way back. But it would really need to come back, find support somewhere down here. It might come all the way back down to 40 cents is the worst case scenario. It could find support off this low that's here in March 2024 and turn back up. And then it's going to come back up and try to challenge that $1 level. So at this point, it's way too early. What you want to see is it fall into a low, make a reversal, come up, find a point of resistance and test that level to prove that it's actually going to keep going. So I'd say call back into the show at some other stage.
Yeah, looks like it's got a bit more to go there, Sydney. But anyway, thanks for calling in. Our next question is from the self-proclaimed Janine fan club member, Craig. Now, my question is, can you apply the same trading theories we learn in the course to the cryptocurrency market, the more established ones like Bitcoin, Solana, etc.? Now, Zoran, I know it's not exactly currencies, but it's thereabouts to some people. And you're a student.
We offer cryptos as well, actually.
Yeah. Now, you've done the course. You've been a student of the course. Can you apply the methodology across the board?
I certainly believe you can.
Yep. Definitely.
Obviously, you got to be in tune with obviously the rules that you actually apply, because some instruments, as you know, are actually much more volatile than others. So crypto is actually one of those across the board. If you have a look at the Bitcoin, Ethereum, and Solana, etc. So I think you have to have a fairly tight rules when it actually comes to cryptos. But you certainly have it can work for you, and we've discussed it just before as well. Actually, before the show, when we said, you know, if you have a look at the Bitcoin and the consolidation period sideways and significant breakout out of the sideways range was actually textbook stuff that we actually did in the course, and what I actually implement in my own trading as well. So to answer your question, absolutely you can.
All right. Well, Nick now asks, can you take a look at Sonic Health? I don't own the stock, but it is looking fantastic. Would love to get your thoughts and any concerns. Now, Janine, Sonic Healthcare, what
Sonic
do you think?
Health looks really interesting at the moment. There's a short-term downside risk with Sonic Health, although now it actually looks like it's broken through the angle of that line. When I say short-term downside risk, the only issue I can see down here is a level that is really quite strong there. But it's done enough in terms of the decline. If we have a look at the fall, and some of the students will know what we're looking for here, it's actually fallen enough to think that maybe it's actually found support. Just looking at this, you've really got to decide what your rules are. You're trading monthly chart. If that's the case, that's going to set the scene. If you're trading on the weekly time frame, let's have a look at that. What's it done? It's actually gone sideways for so many months, broken out. But it's only just broken out. So it's a matter of deciding, well, what's the trigger that you're going to take to justify getting into this one? And sometimes there's a combination of rules that you need to use to be sure, because the stock could break out and then pull back and and then it's just going to go sideways again. So that's why the confirmation of the trigger is really important, not just an actual rule.
Fantastic stuff. All right, we do now have a text from Reese. Reese says, "Hi team, I would love your thoughts on APE. It looks to have stopped falling and price action is looking better on the weekly charts. I am wanting to take it at an entry if it trades above $11.98 with a stop loss of 15%. Now this is a medium term trade." All right, Janine, Zoran, it can be a combined effort here.
What would you like to talk about, Zoran?
I mean, I'm looking at the stock in itself, and weekly chart doesn't actually look too bad. On monthly chart, it's still obviously in a fair bit of downtrend. Probably key two levels that I'd be looking at on this chart is actually a low of $10. So that's obviously a nice round number. If the stock can actually hold above that $10 mark, then we could, provide a bit of upside in the short term. And the next major level I would actually be looking at is 870. So as long as the stock can actually consolidate within that range, or if it was actually to stay above that level of $10, we could probably see a bit of upside as well. On the weekly chart, it actually doesn't look too bad at all, whilst volume actually doesn't really support it, and I would like to actually see the volume support this move. Levels around $12 could provide a little bit more clarity and a little bit more confidence as well.
Did you want to add anything there,
Look,
Janine?
I think he said it all. I would probably say exactly the same thing looking at that. It's just this week the bar's down, so a little bit of caution's coming in there.
All right, fantastic. Now, remember to show your support for our channel and smash that like button. If you enjoy watching and want to see loads more of our content, click subscribe now. Subscribing helps others find our channel so we can help them too. Now, if you like the topic, we've got something even more important to help you profit. So head over to Talking Wealth TV and subscribe now to continue watching. Before we let you go, what was your favourite part of the show? Was it Zoran's or Janine's, hot stock tip? Was it a viewer question or our topic for the night? Let us know by commenting below. And thanks to all of those who are watching on YouTube and Facebook. If you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all that and more. Next week in our main topic, we discuss, will Trump cause the stock market to crash in 2025? Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. If you love our show, remember to hit that like button now and subscribe to our channel, as this shows the support for the team that puts in the effort each week into bringing it to you. Now, if you are subscribed, then you will always know when we go live and put up new content. As always, thank you for joining us for now. Goodbye, good luck, and good trading.